So let's start with the need for these digital virtual banks, right? If you look at through the lens of governments, through the lens of customers, and through the lens of the broader ecosystem, what's really driving this need for digital or virtual banks? I'm keen to hear views from Wendy to start with.
Hello. Um, I think our Asia story is very much about the unbanked and underserved, right? It's very clear, right, in terms of both what's happening in Hong Kong and Singapore. They are, we're looking for what are actually points of difference. But I think what is also interesting is that all our players are also saying, how do we actually leverage this from a regional perspective, right? Because highest growth, we've all talked about moving from west to east, north to south. So as a result, what is it that these opportunities actually give us when we've got rising incomes and rising volumes of where populations are going to go? So I think that's actually really interesting. I also think what I make the play in terms of the retail versus wholesale, right? Because I think that there's been quite a lot of disruption happening in the B2C space, but it's flowing on through to what is happening in B2B, and that is actually also very ripe for disruption and what virtual banks can actually do with new technologies to actually serve, again, a more complex set of needs.
So if I try and unpack that, right, and you look at the capital requirements across Asia Pacific, you have the narrative. We were talking with a few folks earlier. The narrative in Taiwan was, depending on the exchange rate, 50, 60 million is as the capital requirements there. You look at, this was the number in Hong Kong. Similarly, when you look at the number in Taiwan, a different set of capital requirements. When you look at the number for full service banks in Singapore, we have a huge capital requirements here. And a slightly different story in UK and rest of Europe. So I'm curious, Louis, do you think this need is so big that there's these huge range of capital requirements, right from 1.5B in Singapore to 50, 60 million in Hong Kong and equivalent numbers in between?
So I think you asked the need for these digital banks across three dimensions. And I think from our regulator and from the UK, and with the UK being the leading, I think jointly, but maybe just ahead or just behind Singapore, let's put it out there, fintech hub of the world. And a regulator that has been, like your regulator here, very proactive and on the front foot. And one of the things we were seeking to do was to unstick the fact that we had very little competition, true competition in the UK market. We'd invoked switching policies to try and get people to easily move banks. That was an abject failure. People didn't move. There was no 10x differential in the services they were being provided. And so it was very stuck as a country. I think when you then say, well, 1.5 million of the UK population are unbanked, underbanked. For an advanced economy, that's still a huge amount of the population that is underserved. They weren't being served in the right way. There was this lack of switching and lack of competition. That's why we wanted these digital banks to be set up and to increase the competition. I think from the consumer's point of view, and I think that's true everywhere, they had got used to it being a utility. And so, yes, they absolutely trust the banks, and the 2008 crisis gave a real understanding of what they trust the banks for, and it is to keep their money safe, but they don't trust them to actually deliver a relationship at large in the UK. And so this was very much about engaging with the consumer, allowing them to have the services delivered to them in a way that other services were being delivered in their lives.
Right. Just to follow up on that, Louis, I mean, if you look at the narrative, especially from a liability play in the UK, with a lot of these neobanks, and there's different taxonomy that's being used to describe them, has that liability shift happened at the pace the market expected it to be?
No, I don't think it has. I think everything's been slightly slower than it was expected. I think the regulatory moves that we've made, the great announcements and PR and what's been happening. But when you look behind some of the real success stories, when you look at actually what has shifted in liabilities, it's much a slower story that's coming through.
Right. And Andy, just reflecting on those comments, right? If you see the UK story and how that has played out, and the liability story hasn't shifted as many expected it to be. On one hand, on the other hand, when you look at the valuation of a lot of these digital banks, right? You could argue some of these digital services businesses were valued at a certain price point. Now we are hearing, some of the big neobanks valued at $1,000 per client kind of evaluation, some unforeseen numbers, right? So just want to get a sense, given you are in this process, you're in the midst of this, you've seen the UK story, how that has not necessarily unfolded. What's driving this excitement towards digital virtual banks?
It's interesting listening to the other two speakers, and Louise particularly there. I think Australia is sort of following the leader. And if I just paint the context of Australia for a second, there are 4 large banks in Australia that dominate, and on a number of measures, 80% and more of the market dominated by the 4. And then you see the unprecedented use of mobile banking coming through or mobiles in terms of the millennial market, etc. There's clearly an opportunity to break or to try to break that oligopoly of the banking system using the digital banking as a means to do it. There hasn't been a new bank in Australia for 27 years, up until about just over a year ago, when the first of the new banking licenses was issued. There has now been 4 new banking licenses. We got the 4th about 5 weeks ago. I think the 3 that it's very early days, but I think what's happening at the moment, people are taking the accounts out with them on a test and see, and to gain confidence around what the experience is like, with the hope that we can entice their full banking services over to us as they gain confidence in what it is we have to offer. There's no doubt, though, there's demand, and there's no doubt that the reason for where we are and the popularity around how we've got to where we've got is on the back of, unfortunately, there's been a sort of banks and I've been in them, so I know, they've lost a little bit of sight as to why they exist, and they've lost the belief or the trust of the consumer. So there's a following wind here to allow us to get into that space. What we've got to do is get in there quickly with good propositions that offer a great experience, and bring people over as quickly as we can. In terms of the valuations that you touched on, who knows if those valuations are right? I think they're very undervalued, quite frankly.
You must be a digital bank.
No, we just need more capital.
So Sam, given your background, right? I mean, you were formerly with a private equity fund, and an ex-consultant, and building this entire narrative as a pan-Asia fintech. I'm curious that you didn't jump into that bandwagon. Let me also create a digital virtual bank, given all the needs that came up and the size of problems that were highlighted earlier. Why is that? Did you feel that a lot of these digital virtual banks might end up as a hobby bank? Let's keep some hobby money aside and use that for some fun stuff. Did you feel that we might see another WeWork kind of a saga with these digital virtual banks, given how the valuations are skyrocketing? The valuation of digital bank per client is way more than PayPal and Facebook. So curious to hear your thoughts.
Yeah, there's a lot to that, a lot to the question. Look, our business, Compare Asia Group, we're an independent, consumer-focused business to help people figure out their finances. And so we come at everything from a consumer lens. And what we see with the evolution across our markets is that the innovation that's happening is happening slowly in general, and it's leading to more confusion amongst our users. So what does that mean? So we consumers come to us to understand their banking and insurance needs and products, and we help them figure that out and then distribute those products to them. And what we see is, one, the pace of innovation is really slow. So though there's lots of talk about digitization from within the FIs, though there's the open API regulations, which are moving at various paces, when we look at the reality of how the user journeys actually evolve and how the user experiences actually evolve, one is it's evolving very slowly. And so all of the talk and the hype around what can happen, while it is very exciting, is still quite removed from most people's actual experience with finance, right? So that's kind of our one starting point, is there's more confusion that's coming or that's happening, and further innovation is just leading to more confusion. And so if we then look at what's happening, and so how do the digital banks impact that? Well, if we take Hong Kong as an example, since we're a little bit further, have a few extra quarters of insight, right? What we see is that consumers already have relationships with half a dozen banks, and we all already have a few wallets, digital wallets as well. Now we have 8 virtual banks coming into the market. We have digital insurers coming into the market. And so fundamentally, the need that we saw was not for a 9th digital bank. It was to say, this is just leading to more confusion for people. And so as we have the traditional FIs, some of whom are starting to really innovate more, quite quickly with interesting solutions, as we have the digital banks bringing all of these solutions to markets, for us what that highlights is the need to, again, be there as a trusted, impartial, objective source of information to actually help people figure out what their financial product portfolio should look like. And so for us, it comes to that consumer-focused lens, which says if we're there as that trusted, impartial company that can help people figure it out, that's actually the need, not a 9th digital bank or a 6th digital bank across the different markets.